Strong first quarter numbers, steady revenue, rising profits, and improved service. These are the markers that can make an infrastructure utility feel reassuring to investors. Maynilad Water Services delivered just that. Revenue rose 6.2% to 9.09 billion pesos, and net income climbed 10.3% to 3.99 billion pesos, powered by higher billed volumes, tariff support, and a broader customer base. Service indicators all moved in the right direction, with billed volume up to 136.1 million cubic meters and non-revenue water down to 30.7%. But beneath the reassuring headline performance lies a familiar tension for utilities in growth mode. Maynilad's quarter echoed market cycles seen in Manila before, the kind where companies invest aggressively, taking on substantial debt, and maintain dividends even as immediate free cash flow appears tight. The comparison to PLDT during its heaviest network expansion years is instructive. Both Maynilad and PLDT manage essential networks, justifying leverage through predictable cash generation and recurring demand. Both have kept shareholders paid while investing in infrastructure that drives long-term value. For Maynilad, this trade-off is clear. Capital expenditures reached 5.4 billion in pesos the quarter, up 11.6% year-on-year, targeting wastewater expansion, water source development, and system upgrades. This builds on a record 26.9 billion pesos spent in 2025, underscoring a phase of heavy investment rather than transition to mature cash harvesting. The balance sheet, too, reflects a company leveraging substantial debt and tapping capital markets, with current liabilities exceeding current assets and 15 billion pesos of blue bonds outstanding. Dividends remain generous. The approved 1.14 pesos per share payout in February, totaling 8.44 billion pesos, far exceeds quarterly profit. This highlights a core question for investors. How long can rich payouts coexist with the need for continuous capital infusion? Here, Maynilad's journey is reminiscent of PLDT's earlier years, when investors accepted short-term balance sheet stretch for the promise of future cash flows. PLDT's recent disclosures show that after peak investment cycles, sustainable free cash flow and deleveraging are achievable. Maynilad, however, is still fully invested in growth, relying on external capital and asking investors to underwrite expansion before the company can fully self-fund. For investors, understanding this balance matters. Maynilad's financial health is robust, and growth prospects remain compelling. Yet, patience is required. The rewards of aggressive utility investment come with careful scrutiny of capital discipline and payout sustainability. It's a story of steady expansion, shareholder commitment, and the ongoing challenge of balancing today's payouts with tomorrow's infrastructure.